Hey, what's going on, guys? It's Zinc here. In today's video, I'm going to show you exactly how I add your most desirable stocks for free. Yes, you heard that correct. I am adding shares of stock for free. Let's jump right into it. First off, I'm looking at Tesla. I did have a video on this, and we'll drop the link to it right here. I had a video on Tesla as to why I am long. I'll briefly cover that real quick. I'm long Tesla as it retraced 78% of its move from April lows last year, 2024, to December highs of 2024. Previous move, same thing. We're looking at January 2023 lows to highs of July 2023, retraced 78%, and then expands 200% out of that. As of right now, we have retraced 78% on March 10th. So I am long on Tesla. I have a long bias on Tesla for at least the next 2 to 4 years. If you didn't know, Tesla has a leveraged ETF called TSLL. This is from Direxion Daily Tesla Bull 2x shares. So essentially, this is a 2x leveraged Tesla. If Tesla moves up 10% on the day, TSLL moves up 20. In this case, Tesla is down 3.78. TSLL is down 7.5% on the day. That's besides the point. For this strategy, what you need is some capital. In this case, you need $900. 900 to 1,000 to be safe. $900 is what you need to add these shares for free. So what you're going to do is you're going to open up your Gone box that is under the Fib retracement Fibonacci section on TradingView. Go down to Gone box, draw that in, highs to lows with a nice looking demand zone here. Supply, demand. I'm going to go ahead and call it a demand as we are bouncing off of it. Right now, what we are looking at on TSLL, based on Tesla, is an upside bias, right? If I'm long on Tesla, I am therefore long on TSLL. What you're going to do with this strategy is you're going to look at TSLL and you're going to say, okay, it's trading at 911 right now. So I'm going to mark the low of this candle, 685. And I'm going to mark the high up here. This doesn't matter all that much, but this is part of the way that I use the strategy. I'm looking to sell my puts. So I'm selling cash geared puts when it hits this midpoint. This power of 50 is what I like to call it. I did just release a video on that. I will drop the link to it here. The power of 50. In this case, it's 944. So anytime TSLL gets to 944, I am selling a put, either targeting all the way down here at 680. You can sell one for $8 flat, $8.50, $9.50 even. Just know that it should be bullish after hitting the power of 50. You are selling your position when it gets up to the top of your range, and you could possibly average in more if it's the bottom of your range, but for now, let's just stick with one lot. As of right now, TSLL is trading at 907. I'm going to sell a 850 put for next week's expiration. That expiration is 0404 or 0411 if you go to next Friday's expiration. We click. All right, now that we are on the option chain for TSLL, we're going to do an 0404 expiration. We're going to click sell and we're going to click put. This is opening a bullish position. It is known as a cash geared put. I have a link to that video here. What we're looking for is this $9, $8.5, $8 put. Remember, we're looking to sell a put as soon as we get to this midpoint. The power of 50 right here at 946. We are below that with a price of 907. You can target whatever put you want to. You can do a $9 put. You can do an 8.5 and 8. What I typically like to look for is a delta of 0.2. In this case, the 8.5 has a delta of 0.3. The $8 put has a delta of 0.2. That is what we're going to target. This put will yield $35 in premium by this Friday's expiration if the price of TSLL is over $8 a share. So we click plus. We go here, sell one contract. As you can see, it says cash secured put. 100 shares each, bid 36, ask 37. Estimated credit is $35.96 after fees. We have 4 cents in fees on Robinhood. What this is going to do for you is going to put $36 into your Robinhood account. You can either hold that $36 and wait for the contract to either get assigned or expire worthless by this Friday, or you can distribute that 35 before, I would personally wait for the Friday expiration or wait until you close that position, realize that profit. Going back to the TSLL chart, let's say, for instance, TSLL bounces and pushes up to 1060 by this Friday. We're looking at our contract. Our contract is now worth, instead of 36, it's all the way down to $5. So we're up $31 on this position. We exit it, capitalize on an 85 to 90% gain. What we do with that 35 bucks is we then can put that into TSLL shares. We contribute that to opening a position in TSLL. $35, and we have $9 a share right now. You can add partial shares, but 35 divided by 9, what that's going to give you is about 3.8 shares. 3.8 shares of TSLL for free. And then what you do for the following week is you go to April 11th, open the same position, 8.5, $8, 7.5 put, whatever you want. Once you close that cash secured put, you go to the following week and you say, okay, my bullish bias is still intact on Tesla. I'm still bullish on this for the next 2 to 4 years. Therefore, I'm bullish on TSLL. I'm going to look at, let's say, 7.5 puts for next week. These have a 0.21 delta. You were getting $39 in premium. We open the same position. We can see that it has 100 shares each. Cash secured put in the top right. Bid 39, ask 42. We're getting $39 in premium for this contract. Let's say we buy it back for $6 this time. So we profit $32. That $32 therefore contributes to another 4 free shares of TSLL. You rinse and repeat this process until you either get assigned on your position or you have enough shares that you're comfortable with on TSLL and you start redistributing your funds into another ticker. Let's say you're long on Soxel. Soxel, we go in, draw the gone box. We are well below our range right now, so maybe we wait for this to creep back up into that power of 50. If not, let's say we want to go long from here. We're at the bottom of a range. We expect it to retrace back up to 70 and 70. We go to the option chain on Soxel, trade Soxel options, sell put. Let's go to April 11th expiration next week. Let's say we want to sell a $14 put. This has a 0.3 delta. So it means that we have about a 68% chance of making money on this position. I opt for the 0.2 deltas, so 13.5 or a $13 put. In this case, the $13 put is what I would aim for. It has a delta of 0.22. We get $49 in premium. Let's say we have this expire worthless. We profit all 49 bucks. That $49 then therefore contributes to 3 free shares of Soxel. We rinse and repeat that process until we either get assigned or we're at as many shares as we want. That is a short explanation of how I add shares in the stock market for free. Now, it's not technically completely free. You do need some capital to sell those puts with. Cash secured puts require 100x the current share price or 100x the strike price that you're selling. In this case on Soxel, it is a $13 put, so 13 times 100, 1,300 bucks. But you're leveraging 1,300 bucks to get 3 shares for free. Same with TSLL, TSLL, you're leveraging 900 bucks to get 4 shares for free. Go to sell put. It's green. It's a long position. Go to the $8 put for this week. That has the 0.2 delta on it. This means you have about a 76% chance of being profitable on the position. And then we get $34 in premium. That $34 therefore contributes to 4 free shares of TSLL. I will have a live educational video on this Thursday this week. Tune in for that. If you want more videos on cash secured puts and covered calls, I will drop the links to those here. Thank you for viewing my short video. I will see you guys later. Have a good one.